Welcome everyone. I want to do a quick video on Vuzix. The stock was up today 20%, and I want to give you more insight into our process, our methodology, and how we were able to anticipate this price move and showcase it to students in our analyst community within Romero mentoring. So let me pull up right here the actual analysis that we put together in our community feed. Notice here that the first thing that we did was to look at the big picture of the company, understand the business, the product, their service, the sector, number of employees, market capitalization, and shares outstanding. Then we move forward and perform preliminary valuation analysis using only sales multiple. If you notice here, the company's projected to earn revenue at a very accelerated rate. Look at 2022. Revenue is expected to grow by 77%. 2023 up 94%. And by 2024, now we're getting into triple-digit revenue projection numbers, which is coming directly from Wall Street analysts. And the database that I'm using is Thomson One Banker that provides this information, which allows us to forecast revenue over the next 3 years. In addition to that, we use EV over sales multiple, which we calculate our enterprise value by multiplying the multiple times sales. And this gives us an implied enterprise value, then equity value. We also look at the shares outstanding, 42.7 million, then divide our equity value by those shares, and we arrive to an implied price target. Now, the implied price target, it's a suggested price target or benchmark on where the stock can potentially go. And we were using 2023 estimates as our main target, and that represented a 56% increase when the stock was trading at $19.51 back in March 11th. And you can see right here on the right side what was our price target in terms of range. So the stock is starting to get closer to this price range. In addition to that, we have our own checklist on alpha stocks based on growth, based on their product, based on the story, and of course, measuring and paying close attention to the price action. And lastly, we also looked at the chart where we are applying technical analysis. Or what stands out on the right side of our slide here is the large institutional accumulation of volume that I am noticing and displaying on my graph. See here? Okay. And also we had a temporary pullback on the stock. This is due to the sell-off in the NASDAQ. And something else to pay very close attention to is the 50-day moving average line, which the stock basically bounced from it, which was essentially respecting that moving average line and also finding support. And now the stock has actually increased much higher. And as you got to see today, it's trading around $28 a share. So this was part of the homework and analysis that we ended up doing. Now, there's other piece of information that is causing the stock to increase. For example, the company announced in a press release that Cooper Vision will be deploying their Vuzix M400 smart glasses at its upstate New York distribution center. They also recently announced that they received initial orders for their smart glasses to be deployed at major U.S. insurance services company. Now, let's go and look at the company website to confirm these press releases. Okay, so we have that over here. So you can see the press release on March 18, the press release on March 17, and of course, they reported fourth quarter and full year results of their business. And if I click on this one and inspect the performance, right, you can definitely read some of this information here. And right at the top of the headline, look what they're saying. Total fourth quarter revenue increased 117%. That's triple-digit growth. Not many companies in the market are growing revenue this fast. If I scroll down to get a better representation of their financials, where is it? Right here. Yep, 12 months ended. They almost doubled revenue from 6.6 million to 11.5 million, and definitely showcasing very strong fourth quarter numbers ending December 31st. So this leads me to suspect that there's a lot of demand for their product and glasses in the augmented reality segment within the economy. But here's something else that caught my attention when I was putting together these slides for our student analysts in our community. Let's pull up right here our platform. So this is our own actually proprietary platform. Let me scroll down to when we first started to post this analysis, which was about a week ago, almost 2 weeks now, 8 days. But here's what I found also interesting when we're talking about the entire sector or the entire global sales of augmented reality glasses. According to Statista, smart augmented reality glasses sales reached 138.6 million in 2016. Now check this out. And is forecasted to amount to 19.7 billion by 2022. Ladies and gentlemen, this is, if we measure this on a compounded annual growth rate, this is a whopping 100+% CAGR. This is growing faster than the electric vehicle market. So you may not be hearing about this right now in the media, but once the media begins to pay attention to this, you're probably going to hear CNBC, Bloomberg, other analysts begin to hype and promote this segment within the economy and the companies that have exposure or are manufacturing this type of service. So 8 days ago, this was the thought process that I had in mind, and then showcasing the research behind it to come up with a $30 and $35 price target range for our analysts in the community and showcase the process, the research behind these moves. These are the things that we're teaching our students in our analyst community. We also had other research analysis and price target on Snapchat. I'm still bullish on the stock, but however, the recent sell-off in the Qs is not playing out well for Snapchat, but I'm still bullish on the stock. They've been reporting top line, strong revenue growth numbers. So this is how we really think about our ideas and anticipate these moves before they happen. There's a lot of research behind it. Now, another point that I want to touch on, another idea that I was researching late last night is from a big picture standpoint, look at the best performing sector over the last 6 months. And this is all part of the sector rotation. Interest rates might be increasing, the sell-off in the bond market, and different reasons and what other analysts are coming on the media and justifying these moves, okay? Energy, financials have been one of the best, or part of the two best performing sectors over the last 6 months, okay? Also, industrials and materials have also been among the best performing sectors. And then over here, communication has also been amongst the best performing sector. The NASDAQ, of course, this is being represented by sector spiders. The XLK has been underperforming. Now, what I suspect is that money managers that started to buy these sectors early last year, and they got ahead of this major shift in the sector rotation, I suspect that they're going to start selling energy, financials, and industrials and use some of the profits and cash that they're going to raise to buy back some of the beaten down technology companies that are growing 20% or higher over the next 5 years. Now, here's something that I'm also looking at as a caution or warning signs for people that may think now is the right time to buy industrials, specifically Deere, specifically John Deere. Let's pull up the chart of John Deere so that you can understand a little bit more of my thought process and how I look at these things, okay? Right here, I'm displaying just the stock price of Vuzix, where we first came out with our investment pitch and analysis was on March 11th, and now you see the stock increasing, right? You're right. They go up, they come down, they go up, they come down, and then you get ahead and anticipate the next wave. But of course, you need your research. You need to do your homework to put all of the odds on your favor and support higher prices. Now, let's go back to John Deere, okay? Now, John Deere, when you look at it over the last 2 months, it doesn't, you see an uptrend, okay? But if I change the picture and look at a monthly and zoom out, look at the stock, look where it's trading at. And this one, of course, is part of the industrial sector. The stock is trading all the way up here. So imagine who are the market participants buying this stock at this level, okay? And now is when you're starting to hear other pundits in the media talking about the sector rotation, that industrials are going to remain hot, energy is going to continue to move the market higher. Well, what do they have in their portfolio? Were those the market participants buying the industrials and energy sectors right here at the bottom? And maybe those are going to be the ones that are going to be selling it to you, to the public. Okay, let's go back and compare this to GameStop. Remember GameStop, right? At 420, who was buying at 450? Okay, you have to be careful and understand the game that the institutional clients and perhaps the media promotion machine, as I like to call it, are playing. So let's go back to John Deere. Okay, the stock is up here, but I'm not only looking at charts, I'm also looking at measurable variables and valuation multiples to give me some insight on whether or not the stock is expensive or is it cheap, and is it a good buy at these levels over here. So here's what I put together when I was doing my analysis. Now let me scroll through some of these slides. Okay, here it is. So now we're looking at several valuation multiples that we as professionals on Wall Street, whether you're on the sell side as a research analyst, an investment banker, or if you're on the buy side as a hedge fund analyst or a mutual fund research analyst, we all look at this information. The retail public typically don't have access to this data, but these are some of the things that we look at to determine if a stock is overvalued or undervalued when we're looking at multiples. So one of the three of the multiples that we pay attention to, which it's popularly known, is PE multiple. So 20-year forward PE multiple range, notice is near their 20-year high, okay? Now, possible indication of it being overbought? Maybe, probably. Look at between 2019 and 2020. This multiple was around 25x, and it probably went as high as 28x. Then in 2017, the multiple also creeped up around 25x. And now it's trading at 23.4. So it's almost right around that high. So that's one measure, PE multiple. Let's look at the other one, EBITDA, 20-year EV over EBITDA multiple range. Deere is trading above its historic EBITDA multiple range, which is approximately 20x. And you see that in 2018, they came around that 20x and then contracted. The stock declined. Now, all of a sudden, because you're getting that rotation that began 6 months ago in the industrial sector, that multiple is at 24 times. Okay, that's a warning sign right here, caution ahead. And then lastly, I looked at 20-year EV over sales historic range, and notice the multiple is above 4 times. What was the previous high? Approximately 3 times, which was in 2018, right around here. Now it's trading at 4.3x. Warning signs ahead. This stock on a multiple basis is starting to get expensive when you're looking at EBITDA, sales multiple, and then almost forward PE multiple. So warning signs ahead if you're someone that thinks of buying John Deere at this level. And here, I'll share one more insight that I found. This information, of course, is coming through Thomson One. They provide Analyst Report. This is some of the things that we use in the industry as professionals to get access to more research and more data. You have several companies come out with increased price target on John Deere. One is CFR, raising their price target to $430. Okay. Then you have Bank of America Global Research raise their price target to $425. Okay. Then you had Citigroup raise their price target to $400. And look at the day. Once was March 18, March 16, and then we go to March 9th, UBS raised their price target to $360. Now, I found one analyst out of JP Morgan that has a contrarian view on the stock. And I've highlighted this right here. And here's what they're saying. That said, we do not expect ad hoc government payments to repeat in 2021, and structural headwinds for U.S. farmers, increasing competition from South America and the Black Sea region will continue to weigh on U.S. export demand and or crop prices, will likely challenge farmer economics sentiment in the 2021 and 2022 growing season. We therefore see fairly limited growth potential for John Deere, and so forth, and then they continue. But here's what their December 21st price target for John Deere is. It's $287, which is a decline from where they're currently trading at right now, and reflects a 20 times forward earnings per share on 2022. 20 times. Where is it trading at right now? 23.4. So they're projecting a stock decline on John Deere. So who's right? Is JP Morgan right? or is it Citi, Bank of America, or CFR, or are they right? From my perspective, just simply looking at price action and the chart, I would not be buying this stock up here. This is more of my thought process and how I think of the market. And of course, sector rotation. If I go back and look at the overall XL Live, which represents the industrial, okay, look here. This thing is trading at all-time highs. And it has had a really strong run from the March lows, from here all the way up here. And of course, Deere was one of those stocks leading this move to the upside. I would not be buying up here. But that's my analysis. That's my thought process. That's my research. And these are the things that we're doing and teaching the next generation of retail investment analysts and professional investment analysts within our Romero Mentoring Analyst program. For you as a YouTube viewer, as a general public, learn this. This is the reason why I'm showing you this methodology, so that you could have a lot more variables or more of a methodical process under your toolkit to make better investment decisions, more informed decisions out there, and not just blindly follow anyone, whether it is on a forum, on the media, or including myself on a YouTube channel. I just walked you through my methodology for Vuzix and show you more of the things that I'm paying close attention to on John Deere. Do your own homework so that you can learn this and you can protect, which is the most important thing that I want you to understand here, your confidence, your intellectual, your mental capital, especially if you are a first-time market participant or someone that has less than 3 years of investing in the stock market. Because if you buy up here and the stock declines 10, 20, 30, 40%, it might take maybe 5 or 6 months to go up. But how are you going to handle the loss? How are you going to handle that decline? The emotional pain is just too taxing, and it's honestly, it's not worth it. Imagine the people that bought here at GameStop and bought it at $400 thinking that it's going to come back up. That loss in confidence, it's something that you need to preserve and protect. And don't let the buy side, the other professionals that are on the other side of the trade, take advantage of you. Just don't let that happen. Here, let's go on a daily. You see when they come in, you see these uptick in volumes, right? You see that right here? Who do you think this is buying? This is not retail. This is other professional investors or professional money managers coming in. Here's an analogy. It's like they're riding their own wave, right? They create the splash, then the media comes with all of the news and all of the hype, and then they ride the wave, and then they sell it to retail. Same thing that happened right here before the stock increase. There's the big volume, and then they ride the next wave. They ride their own splash and they sell it, and then here comes the hammer. So understand that there is structure to these stocks. Understand that there's other market players that have their own agenda, they have their own game plan, and a lot of the time they already know what the anticipation or the outcome of these stocks are going to be. So I hope you found value in this. I hope you learned something. And with that being said, I'll see you in the next one. Take care.